Hello guys and welcome to my channel. If today is the first time coming across my channel, kindly do me a favor to hit the subscribe button. Put the notification bell so that anytime I post content like this, you'll be among the first to be notified. Peradventure you have problem trading the forex markets. Maybe you are not making consistent profit as expected, or you are trading the synthetic indices which is on deriv and you are still finding it difficult to be consistent in profit making, then don't hesitate to message me via this WhatsApp number to join my mentorship class where I teach and explain everything you need to understand and how you need to go about this trading from either on the forex market or on the synthetic indices for you to be very profitable. So that being said, today let's get into it properly. Today we are going to be talking about the breaker block in forex trading. You see, many traders out there are finding it difficult to find reasons why sometimes maybe their support doesn't hold, their supply zone doesn't hold, their demand zone doesn't hold, or probably those who are using the ICT concept, bullish order blocks and bearish order block fails them. After explaining this concept to you and explaining in details and giving you some illustration at the end of this video, I'm very certain that you know what to do whenever such situation comes up, especially if you are new into the forex market. Is that clear? And please make sure you don't skip any part of this video. Try and watch it till the end. So I have a written um, note here which I normally use to explain, then show you some chart illustration, and then also explain to you how to go about it on the main chart. That means either on the forex market chart or on the synthetic indices chart. Forex trading involves analyzing price movement to find profitable entry and exit points. Among the many strategies and concepts traders use, breaker blocks are a relatively straightforward yet effective tool for identifying potential price reversal or continuation. This article will explain what a breaker block is, how it works, and how you can use it in your trading strategy. Not only that, I'm still going to tell you the difference between an order block and a breaker block. Is that clear, guys? But in a nutshell, a breaker block is a failed order block. That means an order block, a demand zone, a support zone, a resistance zone that fails to hold automatically becomes a breaker block. Is that clear? So, but in this definition, they said a breaker block is a price zone where the market reverses after trapping traders on the wrong side of the trade. It usually forms when a strong support or resistance level is broken, leading to a shift in market sentiment. Now, this is what normally happens. For those of you who have been going through demand and supply, support and resistance, um, bullish order block, bearish order block, this is how the whole scenario starts. Let's say in a bullish market, price is moving towards the upside, right? Here is our high, and here becomes our low, right? Now, when the price retraces back, this point price fail to start going up is usually seen as resistance zone in some cases, right? It's usually seen as a resistance zone in some cases. Yeah. For some traders, assume the resistance area which made price to move down, uh, the area that or the zone that made price to start dropping can be referred to as a resistance area. But the moment this price breaks above it and create a new high, now when you come to the ICT concept, we now say we have what we call the break of structure at this point, which means this initial resistance zone has been broken, right? Now what some traders are usually anticipating is they want price to come down to this point, then they place their horizontal line, and then once price they are expecting price to tap it, then price to start going up, right? Creating another new high. That is for those who love trading the support and resistance. Now, for those who love trading the supply and demand zone, this is what normally happens. In the same sequence, price moves upward, give you a kind of retracement, breaks above the initial high, creating a break of structure here. Now, they see this zone as what they call the demand zone, the supply zone, right? They categorize this area as either a demand zone or a supply zone. Why is it referred to a demand zone? Sorry, either a demand zone or a bullish order block, not a supply zone. Why did they refer to this area as a demand zone? Because it created a new high, or this move led to a break of structure. And for those of the support and resistance traders, they see this area as their strong support zone, right? Having in mind that when price come here, price may definitely try to do what? Try to move towards the upside. So whichever concept you are using, you see that we are still in the same direction. Now for the uh, demand demand zone and the bullish order block traders, they are expecting price to retrace back, right? They're expecting price to retrace back to this point. Then they place their buy at this area. Some go as far as putting buy limit at this zone. Then their stop loss is around the swing low, which is this area. So they're expecting price to come here, then start pushing towards the upside. But this is when this demand zone will not hold. Now, what they expect price to do is that price to start moving towards the upside. Price tend to break that point. Now, this point that price has broken is referred to as breaker block. This is a zone which was able to push price initially towards the upside. And the belief was that when price come here, price is supposed to respect that area again and push price. For those of them who are using it as bullish order block, they are expecting price or demand, the remaining demand, many orders rather, left here to be what? To be distributed. But rather, price tend to fail them. These are kind of trap that are being set by all these market makers. So if eventually you fall in such situation or you have this kind of issue or this kind of scenario happen to you, as a smart trader, you don't give up immediately or you don't uh, start complaining. No, it's just a signal that they have what shifted the price from the up move towards the down move. So you are now anticipating to follow them based on the current move. And how are you going to do that? Since here becomes your breaker block and this place now becomes a new supply zone, right? This place now becomes a new supply zone. So what you should be expecting is anticipate for price to rally back to that area. Now, those who don't understand market structure, who don't understand the supply and demand form of trade, some will see this area as the best place for them to take their entry, right? Now, this is where they also wait and wait till eternity, and price will never come to that zone any longer. Now, when price comes here, what happens next? Price starts going down. So, this breaker block, this is why you should understand this concept because many traders who are into the ICT concept, especially using the demand and supply zone, only few understand that when price um, breaks or go below their demand zone or bullish order block zone or bearish order block or supply zone, that there's an alternative way of taking the entry. Only few traders understand that. So probably you are part of those traders, then it is another time for you to have this knowledge that when such situation comes up, you have an alternative to take. That means you have an alternative entry or an alternative move to enter the market. So this area now becomes immediately price breaks below it because it was a zone we are expecting price to respect, but price failed to respect it. So immediately price breaks below it in this case. Now it is assumed or seen as what we call a breaker block. Either you are a supply and demand trader, either you are a support and resistance trader, whatever one you are trading, this is another strategy you do. Now, when you take your entry at this point, your stop loss is now at the top of this zone. Is that clear? Your stop loss is at the top of this zone. Why? Because if price should close above it, it means that breaker block has also been what? Been taken out. So whichever way price is giving you, you should know how to also go along with price so that you are not taken unaware. And this type of pattern is usually safer to use it on a higher time frame. Time frames like the daily time frame, 4 hour time frame, and the 1 hour time frame. Because this area price hardly breaks structure often, unlike the lower time frame where every time price keeps breaking areas and maintaining areas. So The best time frame to use should be your 1 hour time frame, your 4 hour time frame, daily time frame, or probably your weekly time frame if you got such opportunity on the weekly time frame. So that being said, let's proceed to our notes or our article and then continue from there. So we've talked about the terms breaker block. Now, this is how it normally looks like, just like example that I showed you on the blank part just now, where you can see that price was giving us a kind of bullish move, retrace back, then break above this previous high here. Price break above this previous high. Now making here a strong support zone, right? Making there a very strong support zone after having that break of structure. So the intention is now for some trader we believe that once price come back to that zone, price has to start going up because we are expecting price to start creating higher highs towards the upside. But what happened later, price tend to break below that zone, then immediately it creates what? Here becomes our new supply zone, and here becomes our breaker block because initially it was an area of support for price, right? It was an area of support for price, but immediately price break below it, definitely it will be acting as resistance, which we also call flip zone. When you hear flip zone, where a support become a resistance or a resistance becomes a support. So on price arriving towards that zone now, those who like what I said the other time, those who like trading the ICT concept will say, oh, once price come here, I'm going to take a serious I'm going to press a sell, right? But as they're anticipating for price to come there, price made back to the breaker block because here becomes a breaker block where price came to respect. Price came to the breaker block and start descending towards the downside. Can you see now? Price came into the breaker block and start going towards the downside. So this is how it normally looks like when you see it. But when you go to your chart, I'm going to tell you how you are going to identify it on your chart more better. So, for example, a breaker block may occur when a key level fails. Like I said, this was a key level that was holding price initially. So once it breaks, then we can identify that area via the key level that has break that this becomes a breaker what? A breaker block. A price break a support or resistance zone that previously held fame, just like what we have here. First breakout traps traders. Price initially moves in one direction, enticing traders to join. Now, price was moving upwards up to the extent that it broke structure. So traders will now have that mindset. Oh, since price has breaking structure, automatically here becomes our demand zone, bullish order block. Then we needed to put. So this is a trap. And when they are placing their sell limit at this zone, putting different types of order all the way to just push towards the upside. Price comes and then take them out. Then institutional activity, large players, banks, hedge funds, etc. manipulate price to collect liquidity before driving the market in the opposite direction. This is what they did. At some point, let me explain that aspect to you deeper because you really need to understand this. At some point, price go to this point, right? Price started coming down. Now, what those traders who like trading this zone, we see this area, they'll say, okay, price only clear liquidity coming back, and once it comes here, it's going to start pushing up. That is their mindset. Not knowing that immediately it took out liquidity because immediately price start dropping. Some has already placed their sell order at this point, believing this price is going to be going down, right? See what happened. Oh. They placed sell order, then their stop loss was a little peep high than there. Then they put their stop loss maybe somewhere around there, believing that price has started going down. Price came back to this support zone, move, take them out and sweep their stop losses, all the liquidity there. So those who joined when price came back to this point and those who have been in the market, everybody has been pushed out. So price start dropping. And who does this kind of move? They are called the market players, the key players of the market, the big boys, the market institutions like bank. They are the one who normally do that because they have enough fund to decide price movement in the market. Is that clear? So This is why you should understand this concept very, very well. And so that when you come across it, or probably you are a victim, you know how to quickly join the move using your breaker block method. Now, how to identify breaker blocks? One, look for a strong move. Breaker block often follow a significant price move, either up or down. Now, this was a strong move. Which break, when they say strong move, we are talking of move that led to that break. Can you see it? This is in the case of downward move. Now, when you look at this strong move and you notice the area price has broken, the candles there, the top and the bottom of these candles here at this zone, you are going to highlight them by placing uh, either a trend line or creating a box on that part, on that area. So when you create your box like this, let's assume this is the top and this is the bottom of those candles. So this makes up your order block. That is what is that part is trying to explain to you and other part. So when you highlight it like this, when price taps in there, this is your stop loss zone. The top of those candles becomes your stop loss. Because if price should go above and hit there, then it means there's high probability that this breaker block may not hold. Exactly. But it's very, very rare to find a breaker block that just happened since price has not gotten to that zone before. The first time price is going to go there, there's high tendency price is going to react just the same way when price taps into your demand zone for the first time. Even if price is going to break it, it must react in some ways. But when these institutions are involved, then the force become too much for price to even wait and react at some point before it breaks through. So that is what usually happen in that case. So going back to how to identify your breaker block. Now, they said look for a strong move. Breaker block often follow a significant price move, either up or down. This move may break through a period high or a low and then sharply reverse. That means you see that before another way to identify it, they will break a high. Immediately they break that high, it means they went to sweep liquidity. Then you not see the move drastically, not breaking only that high. It will come and break your support or resistance zone, your demand and supply zone, whichever way. This is how you can easily track. These are attributes of how you can identify a breaker block. Then two, find a key zone of support of key zone of support or resistance. Breaker blocks are typically located around key levels where price has reacted multiple times in the past. These zones act as area of interest for traders. Now you can see that this zone here, price has initially reacted at that point before, right? Despite that it was a low, price came here and reacted by pushing price up. Now the first one said it's going to break a high or a low. In this case, it was a high. Immediately break it, the sharp move took out this high. That is one of the attributes or characteristics. The second characteristic is that look for a support, a supply zone. It is also possible for you to take out a support or a support, a demand zone or a blue order block zone. In the case of buy, while in the case of sell, a resistance, um, a supply zone or a bearish order block zone. So once it takes it out, then you can easily say yes. These are what you can easily use to identify a breaker block, right? These are the things you can easily to identify a breaker block. Then thirdly, watch for a fake out. The market may create a false breakout, also known as a fake out, by moving past the key zone. That means it will break out of that key zone, attracting traders in the wrong direction. The subsequent reversal from that breaker, the subsequent reversal forms the breaker blocks. So this is what and how you can identify a breaker block. Then anatomy of a breaker block. A breaker block is best visualized as a price box or a price box on your chart. Here is how to draw it. Now, this is what I taught you just not quite long. That the candles around this zone, the top you highlight it, the bottom you highlight it. Then when price come back to the bottom now, not the top anymore, of those candles which formed your initial uh, either support zone in the case of buy Why the bottom becomes your area of entry, the top becomes your resistance, your stop loss, why the bottom becomes your area of entry. So let's assume we have candles like this here. I'm just giving you an instance. Let's just draw candles like this. This was the first candle at this point. This was the second candle at this point. So which later triggered the move towards the upside, right? Let's say it gives you this, it keeps giving you this move. And lastly, you now have this move that breaks structure. So what you are going to do now is you are going to highlight that area as your order block. So the top of this candle and this one, this is what this whole thing here is what you are going to highlight for the move, right? So not I'm not saying everything. The first two that led to that break of structure, the top you highlight it. So this becomes your area of stop loss, and immediately price is coming in, you open or you place an order. So if price should breaks and close above this zone, then you have a change of mind. Exactly. You have a change of mind. Probably that zone will not be respected any longer. So, but if it's going to be respected, it may not even get halfway of this box. You see price start dropping towards the downside. So that is what is trying to say about that. As you should draw, make sure you identify the top. That means a breaker block is best visualized. Locate the candle or group of candles. Find the last bullish candle before a sharp move down. That is in the case of a sell, or the last bearish candle before a sharp move up. So you highlight it. Mark the zone, highlight the range of the candles. This range becomes your breaker block. That is just exactly what I did there, not quite long. Wait for a reaction. Monitor how price behaves when it revisits that zone, just like what happened there. You see, if that is the same way we did, immediately price revisit that zone, then you see a kind of push towards the downside. That is in a sell scenario. Exactly. Then how to trade breaker blocks. Entry point. When price revisits the breaker block, it often acts as a new level of support or resistance. You can enter a trade. That means that price initially it was a support, now it's going to be acting as resistance. And if it's acting as a resistance before, if price come back to that zone, it will be acting as a support. So when we go to the chart, I'm going to highlight it or show you more clearer on the chart. So proceeding further, for a reversal, if price shows rejection, e.g. wicks, bullish or bearish within that block, that means what you're going to be seeing is it's going to be indicating, it's going to be dropping or showing wicks at that zone. For a continuation, if price breaks through the block with strong momentum, that means now if price breaks through that zone, it means price is going to continue towards the upside. Is that clear? It means price is going to continue towards the upside. And if it's downside, if price still gives you a kind of big or less than engulfing bar, it indicates that price is going to continue in the downside. Now, stop loss placement. Place your stop loss just above or below the breaker block to protect your position in case the market moves against you, just like what I explained not quite long. Take profit levels. You target set take profit level based on the next key support or resistance zone, or using Fibonacci retracement level or risk to reward ratios. Then example of a breaker block. Let's consider an example market scenario. Price is in an uptrend and breaks above a resistance level. Many traders enter long position expecting further upward movement. 2. Reversal formation. Price suddenly reverse and breaks below the previous support level. The last bullish candle before the uptrend reversal, before the uptrend reversal becomes the breaker block. Trading the reaction. When price retests the breaker block, it acts as resistance. A trader might enter a short position and place stop loss above the block, right? Just exactly what I showed you when I was highlighting the area of breaker block on that sample above. Why are breaker blocks useful? Now, what are the reasons as a trader? Why do you need this breaker block? Why is it so important that some people take it as their own way or their own strategy? Trap identification. They help traders spot areas where others may be caught on the wrong side. Yes. Areas where you people are putting their buy limit or stop limit and price drive them into the trade and later took them out. You won't be part of it because yours is you are looking for just breaker block. That is all. You are not cared about other block. You are looking for a support zone that failed, a resistance zone that failed, a supply zone that failed, a bullish order block zone that also failed, or a bearish order block zone that also failed. These are what you are considering. So when those people are taking trade, you are just watching to see you are look yours is a failed zone. So and price definitely will fail people at some point. So when they are losing money, you are chilling, you are holding your breath. And when it gives you the opportunity where they are still in pain of their losses, that is when you are just taking your entry. So this is the advantage why uh people love trading the trade breaker block because it traps identification. It shows you it helps you to identify areas where traps are. That is it. High probability zone. Now they becomes very high probability zone for traders. Breaker block often align with institutional trading zones, increasing their reliability. Get it? Simple to use. Once identified, they provide clear entry and exit levels. So this one don't have to start pounding on which area will I put my stop loss, where should I take my entry. No. In the case of breaker block, it's not like that. Is that clear? It helps you to identify area where you should take your entry and area where you should put your stop loss. Tips for using breaker block effectively. Now, for you to use this breaker block effectively, these are the tips you need. One, combine with other tools. Use breaker blocks alongside trend line, moving average, or Fibonacci retracement for better accuracy. That is it. That is, you should apply either a trend line or those of you who love using moving average. You can also use it, place the moving average, most really moving average 50, right? You can also use it as area or in combination with your other blocks after it is being identified. Then two, focus on key time frame. I said this initially before now that the key time frame you focus on should be either your 1 hour, your 4 hour, and your daily time frame. These areas with other breaker block usually are areas of solid interest because they produce more reliable breaker blocks than lower time frame. Now, the third one, wait for confirmation. Look for candlestick patterns or volume spikes before entering a trade. Now, the difference between breaker block and order block. Yes, there is a very huge difference between these two concepts because when you hear breaker block and order block, it can make of it makes some trader get confused. Which one is breaker block and which one is order block? Now, before we go deep into that, the difference, forex trading involves analyzing price behavior and identifying patterns to predict future market movement. Two key concepts often used by traders are breaker blocks and the order blocks. While they may seem similar at first glance, these two terms represent distinct ideas in trading. This article will explain the difference between breaker blocks and order blocks in simple terms, helping you understand their unique roles in the market. What is an order block? Before now, if you've not watched the video I made about order block on my channel, kindly look for that video and watch it so that you have more and deep knowledge about how you can identify a good order block and what are the characteristics of order blocks. An order block is an area on the charts where institutional traders such as banks and hedge funds have placed a large number of buy or sell orders. These blocks are significant because they show where the market money or sorry, where the smart money has taken action, causing a strong price movement. Other blocks often act as key level of support and resistance and they indicate zones where price is likely to react in the future. Example of an order block. We have one. Price moves sharply upward after consolidating in a small range. The range where price consolidates before the move up is marked as the bullish order block. Trader which Trader watch this zone for a potential price bounce if the market revisits it. Now, let me give you a sample of what another block is. Though I've explained initially, probably you didn't get it. This is what another block is. In a bearish scenario, price gives you a move towards the downside, creating a high from coming from the high and creating a new low. The next thing, price makes reversal, right? Probably even taking out that as liquidity, but close, it might end up clubbing it weak. But in some cases, what you notice is after giving you this reversal, it will create a new low and there will be a break of structure, right? Because one of the characteristics of other block is that it must have a break of structure. So there must be a break of structure. Immediately price break structure here now becomes a bearish order block, right? This zone now becomes a bearish order block. Now the belief is that for price to move drastically to the point it breaks this point, then it means that the market makers are in action. So some traders have this belief after going through the move from up here to this point, if it has all the characteristics that an order block need to possess, then they automatically anticipate for price to move back to that zone, right? Because this is their own area of interest. Now they put some go as far as putting sell limit at this zone, while their stop loss is resting few pips above the previous high. Their stop loss can be at this zone, while some those who like to make it tighter can be a little bit above the high. So their belief is that when price taps into that point, price has to go down. So this is how other blocks look like. Is that clear? So let's go back to our article. Since I've been able to draft what another block looks like. So, but make sure you go and watch the full video. Probably you want to get more insight about what another block is. Now, we've talked about the characteristics and we've talked about how it looks like. What is a breaker block? Just based on the concept we are currently working on. A breaker block occurs when a price zone that previously acted as support or resistance is broken and the market traps trader on the wrong side of the trade. This creates a reversal pattern that traders can use to identify high probability setup. So we've talked about it and we've talked examples of breaker blocks. Breaker blocks above, price breaks above a resistance level, luring traders into long position. 2. Instead of continuing upward, the price reverses and breaks below the level. That means the support zone now. 3. The area around the first breakout becomes the breaker block, often acting as a resistance zone. So this is just giving you an illustration or a kind of reminder of what we said above regarding breaker block. Now, key difference between breaker block and other blocks. Now, these are the major things you should know that makes this other block and breaker block totally different from each other. In definition, a price zone showing institutional activity is a breaker block, just like what I told you that when price moves and breaks structure, now traders tend to have this mindset that the institution are involved because that move alone, they got to start to scan it. If it has all the necessary information needed or different characteristics needed for it to be a breaker block down, they take it as a breaker. I'm sorry, an order block. They take it as another block. But in the case of breaker block, a price zone formed after trapping traders. This one will come up after price have trapped you by giving you a kind of mindset that okay, we are selling, no, we are buying. So it creates a support zone for you, creates a demand zone for you. Your own motive is when price come to that demand zone, supply zones, or bullish order block, you want to buy. Now they now fail you at that point. After you have placed your order, put your stop loss, they sweep your stop loss and they move out of that place. So it is a trap. It forms after uh, luring you into trade or taking entry. Two, formation. In terms of formation, order block created before strong price move. It is formed before strong price move. That means it will be created down. When price now come there, you will now be expecting that strong move towards the answer. But in the case of breaker block, it is after it has breaking that point that you consider that area, because you can't see a demand zone and say it is a breaker block. Why? Because price has not breaking through that zone, right? So until price break through that zone before you consider it as a breaker block. But in the case of order block, it will be formed down. Your demand zone is already down. It has been formed long immediately price break structure. It has been formed. Also, just for price to come in, tap it before it start going. But breaker block, it is after price has taken you out of the trend or market. That is when that one will form. Then market rule as act as support or resistance. Yes, your demand zone, your support, they act for price to stop, or they hold price, right? Price tend to stop or break at such zones. But the signals, in this case, in the breaker block, signals a shift in market sentiment. That means once price break through your breaker block, your support, your demand, your supply, your bullish order block, then it is a kind of um an insight or a signal that price is moving from the initial move towards another move. That means opposite move. Trader focus indicates where smart money is active. Now, people normally see this bullish order block, bearish order block, supply demand zones as area where the smart money are. That means where the market makers are. So that is why they focus on those zones for them to take entry and trade alongside with them. But sometimes most of these areas are trap. So highlight for the breaker block areas, this it highlights areas of trapped liquidity. That means when price just break it over, they only use this area to pack liquidity. They will lure you, make everything looks okay in your presence, right? Because they know what you have in mind. They know that this is the kind of mindset you carry, that you always believe that your demand zone has to push price up. So they will create that kind of picture in the market for you, lure you into the market. Immediately you take your entry now, they come with an opposite move, and then breaks through and leave you uh, in a kind of a depression. So how to identify other blocks? Spot consolidation. Look for areas where price moves sideways before a strong breakout. Mark the zone. Highlight the range of candles in the consolidation area. Monitor the retest. If price revisits the zone, it often acts as support for bullish order block or resistance for bearish order block. How to identify breaker block? Find a key level, look for zones of support or resistance, watch for a fake out. Price moves through the level but quickly reverse, right? Mark the reversal zone. The area of the first breakout becomes the breaker block. So that is what is this third part is saying. How to use order block and breaker block in trading. Using order blocks. For more details, just go. I won't want this video to be too long. Go and watch the previous video. There in that place, I explained it to details how you can use order blocks for trading. So let's go to breaker block. Using breaker blocks, entry point, trade in the direction of the reversal once price reacts to the breaker block, right? That is what we've said initially from the top. Why I show you that illustration. Stop loss position. Your stop loss just above or below the block. Take profit. Use nearby support or resistance level to secure profit. Why understanding the difference matter? That means why should you understand the difference matter? Recognizing the distinction between order blocks and breaker block can improve your trading decision. Better trade entry. Now you won't just know when to take your entry and when to take your exit when you approach any of these two. That is one. Two, improve risk management. Now your stop loss areas you already know. Unlike before that you just open trade and you don't even know where or how to place your stop loss or which zones you should be expecting for exit. Insight into market dynamics. Learn how institutional traders and liquidity trap influences price movement. So you can see these are all the explanation regarding this breaker block. Now let's go to the chart and do one or two exercise. Okay, this is on crash index. Now I'm going to highlight it based on market structure. So please kindly watch out. We are told that for you to identify your order block, look out for the range where market was ranging, right? So the point where market was ranging, when there is a forceful breakout from that zone, then our order block is resting. So in that case, it means this signifies that bullish order block is at this zone, right? So it means the last candle that led to that break off, sometime some may say this is the order block, that is bullish order block. Now let's draw it to this zone. So you can see that price moved towards the upside, creating a new high. So some traders will have this mindset, okay, when price come back to this point, I'm going to be placing buy. Some might have even placed buy because they see this multiple rejection below here as a strong support for them, right? So they believe price is definitely going to respect this zone because some characteristic of bullish order block is that it should have a sub. It should be situated around the support zone, right? So when after checking all the necessary criteria, it's in fact this really qualifies this area to be an order block. Now, some has placed their buy limit here, while their stop loss is resting at the swing low. Their stop loss is resting at this swing low, this area as their stop loss. Now, believing that when price comes in, price is going to push up. And what do you notice? Price didn't just take them out of the trade, also sweep their stop losses, leading to a break of structure towards the downside, right? Leading to a break of structure towards the downside. Now, immediately that break of structure occur, here becomes their new bearish order block because we have a break of structure here already. Price has breaking structure. So this zone now, which initially was your demand zone or bullish order block, becomes your breaker block. Here, here becomes your breaker block. Can you see it? So when price comes in, some trader who don't have knowledge about it, some will be waiting for price to come in for them to take sell, right? Look at what happened. Immediately price comes in into your order block, which your breaker block, price started dropping, right? And it went as far as creating a zone. That means break a structure, now making here looks like what? Your new supply, your new bearish order block, right? So the probability of price respecting this zone now becomes very high because initially it was what? A support. Now it's going to be acting as resistance. Initially, it was a support zone, a bullish order block zone, and a support zone, but price break through it, creating a breaker block and also making it a resistance zone. But in this case now, price didn't just make here only a resistance zone. It also created a supply zone or a bearish order block. Though when you check the criteria of other blocks, this doesn't merit because it doesn't have all the necessary detail. But the reason why price seems to respect here and start dropping is because it is now a breaker block zone, right? So if you have taken the initial trade, which is this one here, your stop loss would have been around this zone. Then your take profit will be the next support level. Is that clear? So this is how the trader will trade the breaker block strategy. So if you don't have knowledge about market structure, it will be difficult for you. That is one. If you don't have insight about what is called bullish border block, bearish order block, it will be very difficult for you. If you don't have understanding about supply and demand, support and resistance, it will also be difficult for you. So check my videos. You will see all these topics there, so that when you have deep knowledge about it, when you come to breaker block, you won't find it difficult. Then this doesn't happen only on synthetic indices. Let's go to gold. You also notice that on gold, same situation happened last week. For those of you who love trading gold, at some point, this was our area of interest where we are expecting price to drop from, area of resistance, right? We are hoping for price to drop from there all the way down. And then what happened? Why are we expecting price to drop there? Because we have a break of structure here. And when you go to the definition of or the characteristic of order block, price was ranging here, so we have a kind of massive move towards the downside, making us believe that the market makers are the one in charge or involved in this move. So we have this belief that, okay, since price has given us such move towards the downside, and here becomes our order block for bearish move. So we anticipate that when price comes into that zone, price should definitely go down. It has all the necessary attribute of an order block. Now this is on a higher time frame, which is the 4 hour. But what happened when price came there? Price break through that place. It failed to respect the order block. Now immediately it break through. It now makes this place looks like, well, it now make it a breaker block. So, and when you notice when price break through, price came to it. Let me draw it very well so that you get to understand. Price came back. Price came back and reacted immediately. It just tapped at the top. It didn't even enter. It just tapped at the top and price started buying. So our exit point will have been this point where we have another confirmation of a bearish order block, right? Where we'll be anticipating for price to react from this zone. So probably if we have taken our buy from here up to this level, we will have been opting out. But do you notice that price has started feeling that point again? So when you don't understand order block, breaker block, the differences, and in fact, in general, market structure, it will be very, very difficult for you. So sometimes when you identify area of supply and demand, and you're anticipating for price to go with full much confidence that this area is very solid because you can see all the characteristics that is necessary for price to reverse. But at the end of the day, price failed to reverse from those zones. Then you get upset, right? This is how they track you. They make you lose money often and often in this forex market. So I think with this you have understand what it's all about, how you can identify a breaker block and how you can trade it. But if you are really interested in getting all this, because for my student, my student have all the necessary material, everything I've been saying so far, they have the necessary material, they have the videos, they have the guideline. So if you want to join, just because you want to join my community where I teach how to identify all these things and how you can trade profitably, either the synthetic market, the bullish order block, the bearish order block, any kind of trading pattern, then here's my WhatsApp number. Don't hesitate to chat me up. And once you chat me up, you enroll. I also have a community. Once you join, I'll add you to the WhatsApp community. I provide you with all the necessary material, including video and softwares that's going to help you identify all these things within a twinkle of an eye, where you will not be a victim of all these negative um moves. Exactly. So this is my WhatsApp number. You can also check the description below. You see my WhatsApp number there. Then you can chat me up. So thanks for watching. Make sure you subscribe and then put on notification bell as well. See you in the next one.